Hello and welcome back to the channel. In this series, you're going to see 25 days of trade analysis. I am calling it 25 days of Tradesmas. In this Tradesmas series, if you are going to be watching it, I highly suggest that you take the opportunity to be participating in the giveaway. I would love to give back to you guys in the YouTube world who have supported me and followed me. I am always very interactive in the trading floor community, but I know there's a ton of you who have followed me for a while who aren't in there, and I want to be able to give back to YouTube as well. So from the bottom of my heart, thank you very much for all of your guys' support here on my YouTube channel, and I am wishing you all the warmest of holidays, whatever holiday it is that you celebrate. I personally celebrate Christmas, so therefore I am doing the 25 days of Tradesmas. But whatever your holiday season is, I wish you and your family and loved ones a very warm and happy holiday season. With that being said, I am doing the giveaway here on my channel. So for every day that I do one of the Tradesmas videos, if you do any sort of interaction, if you like, comment, or subscribe, you will earn an entry to be able to qualify at the end on the 25th day to be part of the drawing that I am holding. I will draw a winner for the giveaway. I will announce the winner on the 26th of December. The prize will be to win a yearly subscription to the trading floor. So if you guys are interested in it, make sure that you are doing the likes, subscribe, and comments. Obviously, you cannot resubscribe over and over again, but don't worry. You will get 3 credit points towards that, but then every day following it, as long as you leave a like and you leave a comment, you'll get 2 additional entries for each of those. In addition to my giveaway, if you guys love giveaways, we are doing one on the Trading Floor YouTube channel as well. It's the same thing over there in order to enter as well, though it is interaction. So if you like, comment, and subscribe over there with that channel, you are going to be entered into a drawing at the end on the 25th as well. We will draw a name for somebody to win a $1,000 cash prize. You do have to have PayPal to accept this prize, so make sure that you can accept PayPal if you're going to go over there and enter into it. But I think that's a really nice prize. I think most people this time of year would love to have $1,000 extra. So make sure that you guys are also checking out the Tradesmas that we are doing on the trading floor. And there are lots of styles of trading happening over there on their Tradesmas. You will see all of our live streamers and our staff submitting videos. So if breakout trading isn't really your thing, or maybe my style isn't your thing, no worries. Go check out the Trading Floor's YouTube and make sure you are subscribing, and commenting for an opportunity to win $1,000 cash prize at the end. Okay, guys, let's get into the video, and happy holidays. Hello and happy day 17 of Tradesmas. So today we are going to look at a loss. So that is what we have here on September 18th. It was for a loss of $1,342. And yeah, I don't have a good excuse for this trade. This is it's just a loss. They happen. And I didn't even have the ability to secure this trade, but I'll walk you guys through what my thought process here on this trade was. This is an alert type of thing, just heads up. I know that I was trading against the trend. So you guys will know that if you've listened to the videos that I have been talking about how NASDAQ since August was in a very bearish market. So you guys can see August is here. And this is what the charts were doing. It's just dropping, right? At this point in time, we had one good retracement that happened over the course of, a few days and retraced this move, which was roughly about a 50% retracement. Then it comes down and it fails to make a new lower low, showing that there's continued momentum. I was thinking, well, let's wait and see what happens here. And then I do see the market comes up and it does push up and makes a new higher high. So part of me was kind of thinking that there might be continuation in the market, another higher high. And I thought, well, there might be a really deep retracement of this overall move. It's not uncommon for the U.S. indices to do extremely deep retracements, talking about 80, 90% of the move, potentially sometimes. So I thought potentially we were in that. And what I was looking for was for this zone that it was kind of starting to consolidate within, for it to kind of come towards the bottom of it so I could get a rejection off of it and potentially another push up to retest the top here, the resistance of this zone. That was my thought process. And I thought maybe the retracement might go just a little bit deeper into this area. but it doesn't matter even if it had. I was just targeting the resistance because I knew I was technically counter trend trading. Like the stronger overall trend was downtrend. I knew I was counter trend trading it. So, just know that, like, I'm aware that I was going against the trend, but I wasn't looking to break out of it or anything like that. I was just to touch the top of this zone again, hoping that it would grab a little more like liquidity or something up here before it would go back down. I was wrong. And that's okay because I was counter trend trading it, so it's all right. And I actually was like pretty far in the month at this point. I was well beyond my goals. So I was able to be a little riskier with this trade than I normally would have been. So just know that. All right. Anyhow, so looking at a different view of this trade, zooming in a little bit more, just so you guys can kind of see like what I'm talking about with the market structure, where like you've created higher highs and your lows are following along, creating that step-like pattern. Then it kind of dies off here, but it doesn't actually like make lower lows. It just kind of consolidates. Again, consolidation isn't really suggested to trade, but you can look at some consolidation areas and consider like rejections or breakouts of them. In this case, what I was looking for was a rejection. So knowing that the low of this zone, the support, was being tapped again by this, I figured that if it wasn't going to break it, then it would likely reject off of it and at least try and come back up to the top, maybe try and test that again before it would either tank or maybe just retrace a little bit up here. So again, spoiler alert, I'm wrong. But that was my thought process, was that we were in this area, we're at the bottom, we didn't make a new lower low showing that there was like selling pressure at this point. So I thought, well, if we're rejecting off, maybe I can just do like a quick scalp throughout the day, grab a little of money and just like be out of the markets for the day. I wasn't looking at this for like a long hold or anything like that, just kind of like a quick counter trend scalp. So here's the actual markup, like I'm saying, like the rejection off of this zone and looking at like a nice push up, confirming it, because this is risky. You want to make sure that you're actually seeing pressure to go against a trend like I am and a rejection. And I did see the pressure, like as far as the buying pressure. So I did enter in. You guys have seen in previous videos, I marked the low of my zone that I was working within, and I marked the resistance as my take profit. Again, I wasn't trying to shoot for the tippy top of it. I'm just looking to hit the area with the most price action, the most probable place. But as you can see, looking even closer, I didn't get very far in this trade. I did have like that bullish pressure here that like did make me think we were rejecting. I also had a candle pattern pin bar here too. I mean, it would have been nicer if it had closed as a bullish pin bar. It did technically close as a bearish pin bar, and that probably should have been included to me as well. But nonetheless, it's a candle pattern that usually does signal a potential reversal coming of some sort, especially with it being at a support zone. So that, as well as some like bullish pressure, as you can see in these stronger candles that you're seeing, like that was enough for me to think like, okay, like we are rejecting off of this. We're not coming back or breaking through, and we're likely going to come back and retest the high of the zone. It was just a little push back up into the zone that we're trading within, and it comes and just smacks my stop loss. So, yeah, that kind of like sucks. But yeah, there wasn't really anywhere for me to even go here as far as like curing my trade. The market just didn't come high enough in profit. It wasn't at a 1R yet as far as like this trade goes for me to even secure it at break even or slightly in profit. So it didn't really work out in my favor, this trade. And that's okay because losses do happen. I do lose as well. So I'm not trying to like cherry pick trades or show you guys something like that only works out all the time. That's the reality. There was a loss that I had in the month of September, and that's how that played out. That was my thought process behind it. And yeah, in hindsight, yeah, it definitely looks like I probably shouldn't have taken this because it is a counter trend trade, but it is what it is. And the analysis behind it did fit my rules, and losses happen. So that is what I have to show you guys for this day. I feel like it's kind of anticlimactic since it's a loss. Just a tip as a final note here. I would save your screenshots, like even if it's just keeping things like what I do here and screenshotting your monthlies on your trading terminals, what I do. It does help you as far as your like keeping track of your trades. If you're not journaling, I definitely suggest journaling. But even if you don't do that, keeping screenshots of your stuff and going back when you do have time to look at them, it really does help you like figure out like where was your head at, where could you have gone better, And it does help look at your mistakes and figure out where could you make better choices in the future in your trades. So I do highly suggest doing that if you're not already doing that. It really does make a difference. And even I still do it. You guys can see I keep screenshots and records of things. And it's not just for the community. These trades I'm showing you guys were never even posted in the community. These are just for my own sake and my own record. I've never showed these trades, social media or to the Discord community or anything like that. Like, I wasn't using them to just like show off. These are just my true trades that I use for my own records and like what I keep track of as far as like my end of year. That's what I do in December. I go back through all my stuff and figure out like, where did I see patterns? What could I have changed? What could I have done better with? So I do highly suggest doing that for yourselves. When you start getting into like the thick of your trading, just make sure you're keeping track of all of your trades. It does make a difference. All right, you guys, that is it for today's video, and I will see you tomorrow.